So Jacqui, causation. What do you think are some of the topical, the key issues that will come into play during this case?
Yeah, so that's a good question, Paul. Just stepping back a tiny bit though, as with any business interruption claim, the methodology of quantifying the loss is more or less covered in the wording in the policy document. And it's just a question of understanding or interpreting what those words mean. So for example, the BI loss might be calculated as the rate of gross profit, as defined within the policy, times the standard turnover, minus the actual turnover in the interrupted period. The standard turnover is typically defined as the turnover that would have been earned but for the interruption, adjusted for, important term, trends and other circumstances that would have affected the results in the interrupted year regardless of the incident. So the trends clause, Paul, that's such an important clause because it requires the standard, or as we refer to it, the but-for turnover, to reflect not only adjustments for trends in the business, but also for variations in or other new circumstances affecting the business. So coming back to your example, in the fire or flood situation, calculating the standard turnover but for the damage could be as simple as taking a couple of years of historic turnover and multiplying it by a trend or a factor that directly affects that business.
Yep.
For example, a change in the commodity market price.
Or it could easily be a change in the foreign exchange currency translations.
Exactly. However, as you've already alluded to, COVID by its very nature is different. It's a different type of damage, and because of that different, the range of, back to that phrase, other circumstances will, in theory, be very broad. Some of those that immediately jump to mind are the impacts of government-imposed restrictions that resulted in full or partial closure of one's business, the federal and state government border closures,
Yep.
which put an end to international and interstate travel, the state government mandated work-from-home orders. Who would ever expect that to happen? Disruptions to one's supply chain due to international border closures, businesses themselves delaying the return of their employees to the workplace.
Or in fact, even the employees resisting any return to work that may have been required by the job.
Exactly, because they didn't want to sit on the train next to someone who may have COVID. And then obviously the non-mandatory business closures due to consumers' general absence from public spaces and venues.
Now, just to interrupt you there for a moment, Jacqui, a lot of those other circumstances that you talked about are the sorts of ones that would actually depress a claim.
Mm-hmm.
But then on the flip side of that, you've got the level of government support that was provided through JobKeeper, and plus other sorts of support, whether through the banks, landlords, or the ATO, that may also allow the business to actually operate more at a normal operating capacity.
Absolutely, and that's such a good point, Paul, because if you were to take all of the circumstances into account, the good and bad, the but-for turnover could be reduced to the point that no loss actually arises.
Correct.
So while the Australian courts have yet to address this issue, the recent decision in the UK Supreme Court offers some hope to potential claimants, concluding that COVID-19 and its various consequences are not trends or circumstances for the purpose of determining standard turnover.